What's going on, YouTube family? Welcome to Automotive Life. My name is Lucky, and today we're going to be talking about a very controversial topic. What if the government stepped in and regulated dealerships as well as auto loans? So the purpose of my channel is to be transparent about the automotive industry. I am not pro-customer and I'm not pro-dealer. I am right down the middle. My point is to show you both sides of the coin and let you guys see what each other is seeing on each side of the sector. Now, with that being said, a lot of times people heard me say that you don't want the government to step in and regulate the automotive industry because it's going to be really bad. And I noticed I got a lot of feedback from people saying, how could you say that, Lucky? The dealerships are awful, the banks are awful, we need the government to jump in and regulate it. So I'm here to tell you guys that 80% of the people watching technically can't afford the cars that they're currently driving now. Now, back in 2008, after the housing market crashed, a lot of people lost money and basically blamed it on the auto loan sector. All these crazy ninja loans with no documentation, no income verification. And so the government stepped in and decided they were going to regulate it so these things wouldn't happen anymore. They capped off the LTV, where now you had to put maybe 10 to 20% down. If you didn't, you had to put PMI insurance so the banks were covered. On top of that, they wanted to make sure you had verifiable income, so you'd have 2 years of W-2s. On top of that, you had to have a certain amount of DTI, which we're going to talk about now. Usually most banks wanted you to be maybe 45 to 50% DTI, and if you had really good credit, maybe 60%. Now let's go ahead and jump over to the automotive sector. So what would it look like if the government were to regulate us? So we're going to be starting off with very basic numbers that you can Google to play along. So I want you to go into Google and type the average new car price, which is $48,008. Now we're going to be typing in the average American's income, not household, individual. And you're looking at around $41,553. Now, let's go ahead and divide that by 12. This will give us our monthly income of $3,461. Now let's go ahead and move over to average rent. Average rent is $1,702. Your average mortgage payment in America is $2,823. Now let's go ahead and add on a student loan. Your average student loan payment is right around $384. Also, the average American pays about $430 a month in credit card payments. Now I want to add all these things together, and this is what's going to give us our DTI. Your DTI is your debt to income, and this is what gives you the power to buy a house. So our total DTI is $2,516. Now, if you were to divide that by our monthly income, which is $3,461, you will come to 72% DTI. Remember when I told you guys that most mortgage companies want you to be around 45 to 60% DTI? So with 72% DTI, how are you going to be able to afford a vehicle? Now look at these numbers. The average American living the average American life with the average American debt can't afford the average price new car. So let that sink in. So to hammer my point home a little bit more is all the numbers that I showed you guys are all gross numbers. There's no tax taken out, no health care. On top of that, if you look at expenses, it's just your debt from your regular things, not including your power bill, your water bill, your phone, your cable, your food, all these things that are really high because of inflation. So how does a regular person be able to qualify for a traditional car? And the scary thing is this is just to get approved. So now let's say you somehow make it through these first numbers. How do we determine the term? Is if it's a new car, is it 72 to 60 months? If you have good credit, maybe 3%, all the way up to 8%. That's how they do it. But what if you can't afford any of these and all you could afford is a used car? Okay, well, let's go ahead and move over to the used car sector. How short of a term do we get? Do we give you a 60-month term to maybe a 50-month term if your car is 3 years or older? And then every 3 years, do we step down another 10 months? This is the scale that I'm talking about when it comes to actually basing some sort of government program. It's going to hurt more people than it helps. And so how do we factor in and scale interest? The older the car gets, maybe the higher the interest because of the more risk. But what is if you have an 800 credit score? Is it fair to pay 20% on a 10-year-old car compared to maybe 6% on a brand new car? These are some of the things you have to ask yourself, because remember, the government doesn't want to put you too far in debt because now it's a government regulated program. They want you to have enough money free to go out and shop and buy more shit that you can't afford to stimulate that American economy. So these are some of the things that, like I said, just keep resounding in my head every time somebody says that they want the government to step in and regulate the automotive industry. Now, I know a lot of these people on the outside are looking at this like, well, I make this or I afford this. You have to remember that this is the average American. And pretty soon, houses are going to be not too far along when it comes to being basically priced out of affordability. So now that none of these car manufacturers are relatable to the average American household, most banks can't basically give the customers the $450 car payment they need for a new car. Now we're closer to $700 to $800. It's just getting basically worse. So the only thing we can hope for is for people to stop overbuying. So to make a long story short, I want to summarize this up. 90% Americans that are crying that they can't afford their car payments and everything else, you can't blame the dealer. You can't blame the bank. Nobody held a gun to your head to sign the paperwork. The main reason why you can't afford these cars is because of you. You signed the paperwork. You bought a car that you knew that you couldn't afford because you wanted to have the latest, greatest thing. You wanted to buy something you can't afford to impress people that you don't like. And it makes absolute no sense. We need to take more accountability for ourselves. We've all done stupid things. I've bought a lot of stuff that was overpriced. I regretted it later. Sometimes I was lucky enough to sell and get rid of it. But this is something that America needs to look themselves in the eye and say, you know what? I'm part of the problem, not the system itself. So everybody that wants a regulated banking industry, that's fine. You can go ahead and rah-rah for it. But when you get it, remember this. The average person can't even buy an average car. What does that mean for you? What does that mean for your family? What does that mean for your friends, your coworkers, your employees? You know, think of these things. It's a very scary outcome. But anyways, I want to thank you guys so much for watching. Please put in the comment section below what you thought of the video because your opinion matters. The first hour, I will be answering every single comment that comes in. So make sure you click the notification bell and notified anytime we do. Also, if you consider subscribing, I truly appreciate it. Also, follow me on Instagram at Lucky Lopez. Also on Twitter, aka X, at Lucky Lopez as well. And we'll see you next video.